Welcome back, traders. Thanks for joining me here today. In this short video, we will proceed further on the two Japanese candlestick patterns. The next two candlesticks on the list are the bullish piercing and dark cloud cover. As we can see on this board, the pattern on the left-hand side is the bullish piercing, and the pattern on the right-hand side, which is the bearish pattern, is the dark cloud cover. These bars can form at major key levels for reversal or continuation of a trend. They can also form at swings of trends in the market for pullback or resumption of an existing trend. The piercing candlestick pattern can act for reversal of a bearish trend into a bullish trend, or serves as a bullish higher-low swing in a bullish trend, while the dark cloud bar can serve for reversal of a bullish trend into a bearish trend, or serves as a bearish lower high swing in a bearish trend. For a piercing candlestick pattern to be genuine, the next bullish candlestick after the first candlestick must have a lower low than the low of the previous bar, which is the bearish candlestick. Also, the bullish candlestick must have a high at the range of the midpoint or slightly above the previous bar, which is the bearish candlestick. For a dark cloud bar to be genuine, the next bar, which is the bearish bar, must have a higher high than the high of the previous bar, which is the bullish bar. Also, the bearish candlestick must have a low at the range of the midpoint or slightly above the previous bar, which is the bullish candlestick. The next candlestick patterns in my trading records are the multiple Japanese candlesticks. Multiple candlesticks are usually 3 to 4 and can also be more. These patterns are generally more complex and powerful than single candlesticks. There are a lot of multiple candlestick patterns, but I will cover the ones with the most reliable and frequently ones which form on the trading chart. One of the triple candlestick patterns on our list is the morning and evening candlestick patterns. This candlestick can occur in 3 variations. Number 1, as the morning and evening star. Number 2, the morning and evening doji star. Number 3, and as the morning and evening abandoned baby. This bar consists of 3 candlesticks. The bullish candlestick patterns are tagged as the morning variations, while the bearish candlestick patterns are tagged as the evening variations. The morning star first candlestick is bearish, which indicates the sellers are still dominating the market. The second candlestick transformation can be a bearish or bullish candle, but with a low volume. This signals the sellers are still active, but with a weak interest in control of the market. The third candlestick is a bullish bar that gapped up on the open and closed above the midpoint of the first candle of the formation. This candle signals a high possibility of a reversal of the bearish trend into a bullish trend. The morning star is a candlestick that reveals how the buyers took control of the market from the sellers in a bearish market. Therefore, whenever this candlestick pattern occurs at the support of a bearish trend, it usually signals a possibility of a powerful trend reversal to the upside. Here's an example of the morning star candlestick, which formed at the support of a bearish trend. We can see how the candlestick led into a bullish rally. Here's another good example, and we can see how it led the bearish rally into a bullish trend. The second bar sometimes can be a formation of a doji candlestick or a gapped small candlestick away from the bearish and bullish candlestick. The doji bar signifies a state of indecision, but later the bulls stepped in and exercised a strong bullish interest. while the small gapped candlestick can be tagged as an island. This island is technically regarded as an exhaustion gap with an implication of a high turning point of a trend in the opposite direction. Here's a good example for us to study on this price chart. As we can see, there was a strong selling price action in this market. After the bearish climax candlestick here, the next candlestick gapped low. Next, the candlestick which formed after the island gapped up. We can see how the trend reversed upward. Here comes the opposite of the morning star, and that's the evening star, evening doji star, and the evening abandoned baby. These candlesticks' pattern has a technical bearish implication. The evening variations usually appear at the top of a trend. The first candlestick is a bullish candle. The second candlestick is a small candlestick which can either be a bullish or bearish candle. It can sometimes be a doji star or an abandoned baby. The third bar is a bearish candlestick that gaps down and closes below the midpoint of the first candlestick of the pattern. The first part of the candlestick, which is the bullish candle, signifies that the buyers are still in control of the bullish trend. The second candlestick shows that buyers are still in control, but there is now a reduction in the bullish interest. The third bearish gapped candlestick indicates that the buyer's force to move the trend upward is over. And there's a high possibility for the bears to take over the trend to the downside. Here's an example of the evening star. We can see how it put an end to the previous bullish rally here, and how the market was reversed into a massive sell-off. Here's a great example of an evening doji star at the top of this bullish trend. We can see how this pattern formation put an end to this bullish rally. The abandoned baby formation does not occur frequently on the trading chart, but whenever it does, it means a lot. This candlestick technically signals a sudden change of market sentiment to the opposite direction in the market. Let's search the market to see how this pattern can act for the reversal of a bullish trend into a bearish trend. Here's an example of this candlestick pattern in action. We can see how the evening abandoned baby candlestick reversed the bullish trend here into a bearish rally. Make sure you don't miss the next video. Peace.